guys, here we go again with another of our Evolution Consulting market updates as they have come to be known. This one being recorded on the 22nd of June, middle of the trading day. It's about noon. Wanted to, we said we weren't going to do any more of these until we relocated, but there is a but. We're a day away from the Brexit vote, so it's something that's significant. How could we not? So we did want to put a short video out there. Just to offer our analysis on the Brexit, which we have largely ready, but just to reiterate, based upon some research and from our some input from our network of experts, which we are tremendously thankful for, of course. But as we approach the Brexit, guys, based upon what we've seen thus far, okay, and this also does include input from our network of experts, guys, it's a done deal. And to understand why it's a done deal, the only thing you have to do is you have to look as far as the City of London, the Bank of England, to understand why. For those that remember the Scottish referendum vote, a year ago at this point, maybe, give or take, no idea. That was the first attempt to split toxic assets between the Bank of England and RBS, Royal Bank of Scotland. Okay, so basically, that would have been an attempt to at least mitigate some of the risk posed to larger banks by going, okay, RBS, you take that much of the toxic debt, EU debt, effectively. Bank of England will take that much, and when it all comes crashing down, yeah, we'll be, it'll sting a little bit, but we'll be insulated. Okay. Well, that didn't go over so well. Now they were thwarted there at that point. And then a year later, here we are, and we approach the Brexit. Okay, that's basically the nuclear option for the UK. Pardon the pun. Okay, and nuclear option for the UK is, you know what? Never mind splitting the assets between RBS and the Bank of England and the City of London banks. We're just gonna leave. And believe it or not, that's based upon our analysis. It's a decision that the vote really is more of, as it is in many cases in democracy, it is a dog and pony show. Okay, the decision's already been made that those City of London banks and the Bank of England especially, they need to be insulated from the implosion of the EU because that is going to be happening sooner rather than later, evidently. All right, and so at this point in time, we have to say, based upon our analysis, based upon Evolution 4.0 forecasting, based upon our network of experts and their input, which again, as always, we're thankful for, we're out of here. As just like we're moving out of here, so is the UK. They're getting out of the EU, man. There's just no way that they're going to stick around and go down with the ship. They're just, it's not going to happen. Which, never mind that brings up another interesting point, which we've spoken at length about on Twitter. Okay, and the stuff that we've spoken about at length on Twitter deals primarily with, all right, so if the UK leaves, that sets a precedent. Who's next? And the answer is Germany. For those that have been following what's going on in Germany, okay, there have been absolutely, major moves towards nationalism there. Okay, and Merkel, Angela Merkel, their chancellor at this point, really not exactly the most popular person on the planet at this point. Okay, so the German people are really kind of starting to get fed up with her. And the reality is from when I worked in the boat business, I had a friend of mine, who's Jerry. Okay, used to have a saying, and when I do meet people that have those really cool, clever sayings, man, sometimes I use them. I do like to credit the source, of course, but he had a saying, and it was, "Do something, do anything, even if it's wrong." And I think that's the situation Merkel is in at this point, man. Is do something, do anything, even if it's wrong. She's got to do something. If she plans on remaining chancellor, or if she plans on remaining respected in Germany, she's got to do something, and that's something based upon our forecasting is going to be, as soon as the UK leaves, Germany's right behind. Why? Germany, first of all, is an industrial and economic powerhouse of the EU. Okay, I'm not saying it's the economic power, but it's certainly one of them. With the growing nationalism trend, with the whole debacle going on there with the the refugee crisis going on there and all that, the reality of the situation is, guys, she's going to have to do something. And that something is going to be a German exit. So in terms of, let's think about that from a commodities and from a trading and from an investment perspective, which is effectively how we look at everything here, being that everything really is a transaction. The rumor of a German exit, followed by what is likely going to be a $100, $125, could be a $150 run up in the spot price of gold as a result of the UK leaving. Could be more than that. We're kind of going on the conservative side of, we're saying 100 to 125 on gold. Okay, silver, not quite sure, but we do know again that we're calling the magic number for silver 225. Okay, 2250. So, with that being said, the rumor of a German exit is basically an acknowledgement or a statement that the EU is done. The euro dollar is done. What that's good for on the spot price of metals, guys, we don't know. We haven't done the research yet. So after we move, we get everything all set back up in its new configuration. We'll certainly do the research, but again, it's tough to say, but that's the acknowledgement of the end of the EU, as it were. Okay, so what that's good for in terms of a currency collapse, we forecasted the U.S. dollar. We're going to be quite honest with you. We figured the U.S. dollar would be the first Anglo-Western banking currency to go down and drag all the others with it. We didn't really foresee until now with the Brexit and everything the possibility that the euro dollar might be the first one to go. So, in point of fact, at this point, I don't think I need to say it. Long all the usual suspects: JNUG, NUGT, USLV, SLVP, GDXJ. Entry points, gold's chilling out around the 1270 level now, 1268 last I looked, a few minutes ago. So we would, hop in there because, even the sniff of a yes vote, guys, are going to send gold way, 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 way higher. Okay, and what we're forecasting is for that yes vote. So with that being said, long all those re-entry points, especially if you got stopped out and you cashed out and you took some of your money, you went and you bought physically good delivered gold and silver. Take which remains the principal. Take a little bit more if you want. Throw it back in there. Ride another wave higher. And that's kind of what we talk about, man. When we talk about turning paper into more paper into metals, or turning fiat currency into more fiat currency and then into metal. All right. So also you saw a little bit of a pullback in Bitcoin. Well, the same thing happened in tulip bulbs in Amsterdam too. Okay, if you're feeling particularly speculative, or you have a portion of capital put aside where it's just that's the wowie zowie fun money as it's called. All right, at that point we would say long Bitcoin, long a position in Bitcoin, guys, because we saw what happened. Japanese yen got destabilized. Okay, and you got to run up in Bitcoin. You got the Chinese all of a sudden taking an interest in Bitcoin. You got to run up in Bitcoin. The destabilization of the euro dollar is going to be another run up in the price of Bitcoin, guys. So again, take that paper, turn it into more paper, sell off your Bitcoins, and go buy some physically good delivered metals. Because once again, based upon, I don't really even want to count how many hours of forecasting time and CPU time on the Evolution 4.0 system, the new system is going to be gold and silver backed. And as we like to so often say, deal with it. It's just the way it is. So, with that being said, guys, again, our forecast is for a Brexit yes vote coming up. Apart from that, we're out of here. Speaking of exits, we're out of here, exit stage left style. So, we did want to put one more of these out just based upon some research that we've done in the last day or two. For those of you that subscribe to Wirehouse, by the way, we did not have a Wirehouse edition go out this month, but that is okay because next month we do a combined. We've done it once before. We do a combined 2-month issue, and in that we are going to have some pretty cool stuff, of which one is a full analysis of the Brexit, another is a Trump's border wall analysis from a commodities perspective. We had a conversation with one of our experts where even we had to kind of go, wow. Okay, so that's slightly more plausible than we thought. And we are also going to be including the results of our first attempt at intraday trading. And kind of a little bit of analysis of HFT, high frequency algo machine trading. So it's going to be a really cool edition, man. There's going to be about 6 or 7 pieces in that edition of Wirehouse. It's going to be one of our better editions. So we're excited about it. But in the meantime, guys, again, just wanted to offer a little bit of update and say, and of course, go on record saying that yes, now would be good on a lot of those ETFs and ETNs, especially the metal stuff. That way you can again, hey, stuff happens in the world, man. It's what you do with it. That's what separates the winners from the losers. And as we always say, time usually proves winners correct. So that being said, guys, on that note, be good. Everything really is a transaction.